Hello, 10%ers. This is Michael with Trading Escapes. You can find us at tradingescapes.com. This is the weekly trade recap for December 10th to December 14th. We had 5 trades this week, all on AMD. This is December. It's our basically our month that we're trying to find consistency. We've been at this for 5 months. This is the 6th month. We're trying to develop a trading system, trading plan, utilizing a strategy. That strategy is what we've been trading. That strategy, inside that strategy there's an idea of what we're looking for, there's execution, there's management. So we're going to go over the trades for the week. I'm going to say I'm a little disappointed. The idea that we have, which is normally the easy part, people want to complicate the idea. You know, you're going to have a momentum play, a gap and go, we're going to trade a gap closure. Any of these things can work, and they're all valid ideas. It really comes down to the trading plan, the execution, and the management. And that is what, quite frankly, all traders struggle with, and 9 times out of 10 can't get past. And that's what we're trying to achieve here. We're trying to find that mental strategy to stay in the game, to say, here's the consistency, here's what you have to do. You have to set, besides having an idea, right? We have an idea of what we're going to trade. How do you do your stock selection? What are the setups? What's the execution? What's the management? But you have to have the math behind it as well. And what I mean is, you have to have a number of trades given a number, given a set risk, and you have to let that math play out. You're going to lose, you're going to win. It's not about losing and winning on a trade in a day, in a week. It's about consistency over a month, over a year. How many times do you trade the same thing over and over again? And do you have a winning percentage on that same thing? If you have a 50% win rate on something that's giving you a 3-to-1 profit to loss, you're killing it. You don't need any more than that. But people get wrapped up in trying to find a way to trade where they're always winning. And that's not what you want. What you want is to find a way to trade consistently. Can I take the same type of trade over and over again with the same profit to loss ratio and have a winning win percentage? That's what you want. Forget about losing one day and winning one day. You see the whole internet's full of videos. Oh, I made $1,800 today. Oh, I made $2,000 today. Are they showing all their trades? Most likely not. If you're making that much money per day, if you're making $2,000 a day, and you're spending the rest of your time on YouTube, what for? You made $2,000 today. You made $1,800. Oh, you made $5,000. Why are you wasting your time making YouTube videos? You'd be way better off, trading more. If you can make that much money, like you're saying, then just trade more. The fact of the matter is these people are making that money. They are getting an $1,800 day, $2,000 day, but we're not seeing the entire trade set. All of the trades over the course of the entire year, what do they look like? And that's what can really be misleading to a new trader, because they get wrapped up in this mentality of, they see people win, and then they post a loss every once in a while and they win. And you start to go, oh, well, I should be trading every day. I should be winning. And that's not the case. 50% of the time you should be winning. 60% of the time you should be winning. Hell, 40% of the time, given the right setups and execution, you should be winning, and you're just fine. You're making 50, 100, hell, $1 million a year doing that. But to get to that point, it's really difficult. And you watch my videos, and it's just this mental block. And this week is a perfect example. Last week we cleared $337. Doesn't sound like a lot, but using that same strategy, I could have multiplied that out to, $4,000, $5,000 without a problem. This week, Hell, this week, for some reason, I could not stick to trading what I should trade. And we're going to see that. It should have been a winning week. Instead, I'm down $315. But that shouldn't have been the case at all. So anyway, we're going to, we didn't trade today. So we've got trades on Monday, Tuesday, Wednesday, Thursday. And Friday, today, I did not trade. I had other things I had to do this morning. So I did trade 2 trades yesterday, and you'll see what happened with that. But we're going to start with Monday, and we'll just jump into it and start looking to see what happened on Monday. So here we have the setup for Monday. So it wasn't horrible. Execution. Well, I did have a misstep in execution. So again, the idea is that we have a range play here. So AMD pulls up 50 cents. And what I'm looking for, if I see it pull in direction 50 cents, I want an entry in a pullback from that 50 cent level, right? And then I'm looking for it to run another 30 cents. It's just a matter of history. I've back tested it, and we're looking at over somewhere between 60 and 70% of the time this happens. So that's the idea. It's as simple as that. It runs 50 cents. It's going to run another 30 cents. This stock usually moves in a daily range, anywhere from $1 to $1.10, $1.20. Swings back and forth. So it opens in the morning and it pulls straight up. Okay, first mistake. This is if we cover the 50 cents, right? Here's the 50 cent move, right? From open to here in 2 candles. We consider that in our strategy, we call it a runner. So that means it's running up hard. If it is a runner, we take entry at the trigger point. So we should have taken the entry right here. So as it hit 1977, we should have had an order waiting, and we should have taken that order. We would have had a 10-cent stop at 67. Okay, so we were safe there, and we had a profit target of 30 cents. So that would be 20.07, and we hit it right here. Nice easy trade. Should have been a winner for $300. Instead, what happened was I missed the execution on the runner. It pulls back. So this execution is fine. If it hadn't been a runner, we're okay. So we hit trigger. We have candle number 1, candle number 2, candle number 3. In candle number 3, we come back and pull back to the 9. This would have been our entry. As you can see, we did take an entry here at 76. We didn't get it all the way back at 70, which is fine, but we took it at 76. And as you can see, 76, again, our target would have been 20.06. Clearly, we pull right up there and hit that. What happens? What happened with me is I decided, mid trade, I'm going to implement a new stop, right? Where's my consistency? This is not the plan. I don't, I had an idea the night before, and then I come in and I execute it without testing it, and it cost me. So I think we had a $26 winner here. Instead of an easy $300 trade, we pulled out $26. Now, this new idea, I am going to implement it, and it goes something like this. So during this trade, let's say to this trade, for example, we pull up 20 cents from our trigger. So that would be at 97. So I think we hit it right here at this candle. If we hit 20 cents off of our trigger, then I'm going to pull the stop up to break even. Because normally at that point, if we pull 20 cents off of the trigger point, it's not going to pull all the way back to our entry point. It will keep running, and if it does start to pull back, it's going to be a loser, so we cut our losses. So that is going to be a new a new rule in the strategy for management. If we come in here, let's say we take our entry as a runner, it comes back up, we get 20 cents off of our trigger, not entry, off of our trigger. That's a big important piece. And it's not off of entry, because entry could be 20 cents pullback from the trigger. And that's not what we want. We want 20 cents away from the trigger. So basically what we're saying is we're 10 cents away. We've made it within 10 cents of our target. Okay, that's another way to think of it. Then we're gonna pull that stop up to break even. Now I sort of did that in a way that wasn't thought out properly, and it wasn't tested, and it cost us. So that was Monday. We cleared $26. It should have been easily a $300 trade. We actually have two great entries. We should have taken the runner. Okay, so that was misstep number one. And this management, as we pull back, you know, there's emotion. I was trying to, you know, I was panicking. You know, it wasn't greed, it was panic. It's one of the two things. That's what trading's all about. That's what these candles represent. They represent greed and they represent panic. And in that candle, I panicked. And there's no reason to in this strategy. That's the whole point of this, is to stay consistent. Anyway, that was Monday. So we will move on. And so Tuesday, we got the chart laid out here. This was a little bit of a tricky one, but when we look at it, we can analyze it in hindsight. Obviously, it's a lot easier. What we did was we traded this as a runner, but when you look at it, you can see. So we have to run 50 cents with two candles. So the top of this candle here, as it turns, is 21.12. That means to run 50 cents, we would have to have hit 20.62 right here. And obviously you see that these two candles did not run 50 cents. They actually ran 49 cents. I took a trade as if it was a runner, because I believe what happened was I had my marker set at the top of this candle. Again, just a misstep. But it's these missteps that's what we're trying to get to. You know, I don't like using the term or phrase trade like a robot. But when you have a plan and a strategy in that plan, what you're trying to achieve are consistent trades over and over and over again to make the math work, to allow the math to come out in your favor. When you're in the trade and you think about it and you add components to the trade that aren't part of that plan and aren't part of that strategy, it's a detriment to the overall plan. It's not going to work. And that's what we keep running into. But it's a series of retraining ourselves in a thought process. You know, a lot of what we see is, oh, you're sitting here and you're watching the 50 and the 20, and we've got support and resistance. We're running into it and this and that and everything else, and you're making traders, especially beginner traders, are looking at it as if, oh, I need to make a decision on what I'm seeing on the screen. These are my technical indicators, and I need to make a decision based on that. Your decisions have already been made for you. That's the whole thing. You have already decided what you're going to do. You just have to do it. Forget about the micro view of the situation. Forget about the 1 minute candle view of the situation. You are trading a month. You're trading 21 trades over the course of a month, not the micro 1 minute view. And that's what we have to try to unlearn as we develop. You know, we want a trading system. We want plans built from that system and strategies inside the plans, right? Strategy is the idea, the execution, the management. Inside the plan, what does the plan add to that? It adds all the other details. How many trades? What risk level? You know, yada, yada, yada. That's what the plan adds to the strategy. The trading system, that's how it's developed. That's what we're doing right now. How do we build that plan? What's in the plan? What's in the strategy? What do we do? So again, we had a loser, and it should have been a winner. Easy winner. Okay, let's analyze this. We get in on this candle as a runner, all right? So we shouldn't even had an entry set. Our running entry should have been at 2062. This candle does not hit 2062. We end up taking an entry at 2065. Okay, it did not trigger. What happened was I had this set down here. I believe that's what happened. So we came down and triggered. I'm sorry, that's not this. This was, I'm thinking of a different trade. What happened was this triggered, and I thought it was a runner. So as it pulled back, I got in. And what happens is it's not a runner. I shouldn't have got in. This is just a trigger. So it triggers. Trigger means I can fire on the 1, 2, or third candle, or a pullback to the 20. As you can see, triggers. I should have got in at about 2075 on this number 1 candle. So C1, that would have been my entry. And then exit would have been at 45, which would have been on this candle right here. So another $300 winner. We had I think $100 losing day on this day, and it should have been an easy $300 trade. And we're going to move on to Wednesday now. All right, so here's the view of Wednesday. Let me get rid of this box here. This is actually the trade I was mentioning on the last window. So this was a losing day, and it should have been a flat day. Let me explain why. So execution was off. I shouldn't have taken the trade here. If we look at this, we have big red candle, big red candle. As you can see, this looks like a runner, but it is not. It doesn't actually trigger until this candle. So let's look at our trigger point. Our trigger point is at 52. This candle pulls down to 03. I'm sorry, I said 52 on the trigger. It's 02. So this candle ends 1 cent off. So if we had a running entry, that entry would have been set at 02. Okay. Now this could be a little tricky because if we had that entry set at 02 and this keeps pulling down, then we might have had an entry at 02. And there's just nothing we can do about that. But we'll treat it as if we did not get in on that entry. So that means this is the trigger candle, and we have C1, C2, C3. So C1, C2, and C3 never pull back to the 9, so that's no entry. So that means we have to wait for the pullback to the 20. So we wait for the pullback to the 20, which is right here at 1996. This should have been our entry. Then it runs down. So entry at 1996, runs down. Okay, right here we hit 1976. And as we described earlier, if we pull down, okay, actually 02, I think I said that wrong. Our trigger was at 02, so that means 20 cents would have been at 82. So as we pull down 20 cents from our trigger, as we described earlier, that means our stop would have moved from 10 cent off our entry down to break even. So as we're pulling down into here, our target would have been 66. So we never hit our target. And as it pulls back up, we would have stopped out at break even. So this should have been a break even trade. Now let's look at it a different way, because this is a little bit tricky. It would have been really hard to not take the trade as this is being a runner, just because we would have had our trade already set at 02. So this candle comes down, unless this candle reversed, unless well, actually it did reverse, I'm sorry, it did pull back up, so we would have been okay. So yeah, this should have been a flat trade. Trigger candle, C1, C2, C3, C4 hits the 9, but we need to hit the 9 in the first 3 candles. We wait for the pullback to the 20. We take an entry at 96. Triggers at 02, so that means 20 cents off of 02 is at 82. When we hit 82, we pull down the stop to break even. It continues to fade, pulls up, hits our stop, and we get out flat. So Wednesday should have been a flat day. And instead, we took a $98 loss on it. So now we'll move on to Thursday and see what we have. So for Thursday, the first thing we see is I make an execution error. We never hit our trigger. I end up taking a short off of this 9. So again, I'm looking at the technicals thinking I know what's going to happen instead of following the plan. I think the pullback's going to happen before the trigger, right? So I'm like, oh, okay, the pullback's going to happen before the trigger. I take an entry thinking that then it's going to trigger and keep going down. Well, it doesn't do that. It turns right around. We get stopped out for a $100 loss. And then, let's see. Then I take a second trade because I knew I wasn't going to trade today. I took a second trade. So this first trade never should have happened. Never triggers. We should have never been in the trade. Then we take a second trade. So this first trade never should have happened, like we said. This should have been the first trade. And this is a little bit tricky because I actually did add something into the strategy. And what that was is I took on this first candle, so we hit the trigger, here's the trigger candle, then we have C1, C2, C3. This first candle, because obviously your moving averages are lagging, right? They're not always real time. I've been looking at this first candle taking a trade off like from 10 cents off. So as you can see, the moving average is about 20.45, and I took an entry at 56, but it pulled down to 53. So it got into a range of about 10 cents from hitting the moving average. So I took a trade. Now this trade actually went and we won the trade, and I tried to pull more profit out of it, and it ended up turning the other direction and went red on us. So the whole thing was just sort of a mess. If we trade it strictly by the system, right, we don't have a trade here. It doesn't hit the move, C1, C2, C3. None of them pull back to the 9. This wasn't a runner, so we don't get in a trigger. We don't have a pullback, don't have a pullback, don't have a pullback. Have to wait to the pullback to the 20. So pullback to the 20. So this technically would have been our entry. So at 65, we'd have taken an entry at 65, and you can see that would have clearly failed. That would have been a loser. We would have gone negative and lost. So, I would say that this should have been a losing day. If we followed all the rules, there's no trade here. This trade would have been a losing trade, and that's just the way it is. So, so that's the week. Like I said, it's a little tough. I don't know. We just went through. We should have had what? We should have had 2 winners, 1 loser, and 1 flat day. And of course, we didn't trade today. Well, let's look at what today looks like. Well, look at the day we didn't trade. Yeah, this looks like a tough one, huh? I would say, I'm just gonna guess that this would be pretty clearly a winner. So here's trigger, here's entry at the pullback, and we're in the green all day long. So yeah, it's the day we didn't trade. Anyway, we should have been up what? So we should have had 2 winners. That's 600. Should have had a loser. We're at 500. We should have had a flat day. 500. So we should be ending the week 500 in the green. Instead, we're ending the week down 315. And if we would have traded today, we would be what? We'd be 800 for the week. So that's the recap. We're just going to continue on. Week of December. we got to trade the plan. Don't trade what's on the screen. Keep trading the plan, and see if we can start pulling out some consistency. Hope everybody had a good week. Hope you ended up green. Hope you're into 10%. And I will talk to you next week. Have a great weekend. I plan on doing some relaxing. It's been a long week trading. It's been a long week working. And it's time to relax a little bit. Have a good one.